If we take a look back at the markets in January, when the spread of coronavirus saw investors favor safe haven assets like government bonds, global equities, as measured by the MSCI World Index, declined in January as the spread of coronavirus reduced investors' appetite for risk. Assets perceived as safe havens, such as government bonds, performed well. Moreover, coronavirus concerns led to a lower start to the year for Eurozone equities. We have witnessed the UK's official departure from the EU, and as a consequence of this, sterling was volatile, gaining sharply after the Bank of England kept interest rates unchanged. Nevertheless, commodity price falls weighs on the sentiment towards a number of countries, notably Brazil, Chile, Colombia, and South Africa. A review of the market in February, when the stock markets fell sharply amid the rise of the spread of coronavirus. Equity markets fell sharply and the government bond yields were broadly lower due to the overspread of coronavirus. Hence, government bonds performed well as investors sought out assets perceived to be lower risk. Government bond yields declined markedly, meaning price rose, with US 10 and 30-year Treasury yields hitting record lows. In the March, coronavirus spread fuels sell-off across the global equity markets. In that moment, major central banks remained supportive. Market turbulence increased calls for the US central banks to cut interest rates, while the UK equity markets fell on the fears of the coronavirus and posed a serious challenge to the economic growth. Japan and Korea saw a sharp rise in the reported cases of coronavirus. If we take a look back at the markets in April, when the shares rebounded, supported by stimulus measures and hopes that the lockdown could ease. Surprisingly, the US shares gained. The S&P 500 index saw its strongest monthly rally in 30 years, shrugging off the negative data indicating sharply rising unemployment. Eurozone equities advanced as some of the countries began to allow some parts of the economy to reopen, and also UK equities covered over the period. Moreover, Japanese shares also gained as investors focused on the global picture, and emerging market equities advanced too, but slightly underperformed in the developed markets.